Let's talk about 1.7 million. That's a huge sum of money, and it's not just a random number. It's the amount Navy Federal Credit Union has agreed to pay out as part of a legal settlement. If you're a member, or even if you just keep an eye on your bank statements, this is something you'll want to know about. If you bank with Navy Federal Credit Union, listen up. This isn't just another headline or a story that doesn't affect you. This could have a direct impact on your finances, your rights, and how you interact with your bank in the future. Navy Federal is the largest credit union in the United States, serving millions of members, military personnel, veterans, and their families. With so many people relying on them for their everyday banking, any issue with how they handle your money is a big deal. The credit union is paying out $1.7 million, not as a prize, but to settle a class action lawsuit. This isn't a lottery win, it's the result of a legal battle over how Navy Federal handled certain customer complaints. The lawsuit claims Navy Federal mishandled disputes about unauthorized transactions, often denying claims without proper explanation. Imagine checking your account, spotting a charge you didn't make, and then being told your claim is denied, without a clear reason why. When members reported suspicious activity, like charges they didn't make, Navy Federal allegedly brushed them off with vague responses. For many, this meant feeling powerless, frustrated, and unsure of what to do next. It's a situation no one wants to be in, especially when your hard-earned money is on the line. The case, Stevenson v. Navy Federal Credit Union, centers on whether the credit union followed rules meant to protect consumers. These rules are designed to make sure banks and credit unions investigate unauthorized transactions fairly and thoroughly, not just dismiss them. Navy Federal hasn't admitted wrongdoing, but they're settling to avoid a lengthy court battle. Settlements like this don't always mean guilt, but they do mean the issue was serious enough to warrant a payout and a closer look at how things were handled. This isn't just about money, it's about your rights as a banking customer. When you trust a financial institution with your money, you expect them to protect it, and to take your concerns seriously if something goes wrong. The lawsuit highlights the importance of knowing how your bank should handle unauthorized transactions. If you ever find yourself in a similar situation, understanding your rights can make all the difference in getting your money back. It's a reminder, trust in your bank is important, but you need to know your rights. Being informed helps you protect yourself and hold your bank accountable if they fall short. So, what are those rules, and could you be eligible for a piece of this settlement? Let's break it down. Whether you've experienced an unauthorized transaction or just want to be prepared, understanding the details of this case could help you take action and make sure your money is safe in the future. The rules at the heart of this lawsuit come from a powerful but often overlooked law, the Electronic Funds Transfer Act, or EFTA. This law was created to protect everyday people, like you and me, when we use electronic banking services. Whether you're swiping your debit card at the grocery store, transferring money online, or withdrawing cash from an ATM, the EFTA is quietly working in the background to keep your money safe. Think of the EFTA as your financial superhero cape. It's invisible, but it's always there, ready to protect you from harm. Just like a superhero swoops in when you're in trouble, the EFTA steps up when something goes wrong with your electronic transactions. It's designed to make sure you're not left powerless if your money goes missing, or if someone makes a charge you didn't authorize. If you ever spot an unauthorized charge on your account, the EFTA gives you the right to report it to your bank. Once you do, your bank is legally required to investigate your claim thoroughly. They can't just brush you off or ignore your concerns. The law says they must take your report seriously and look into what happened. Your bank can't simply dismiss your claim without a second thought. They have to dig into the details, review the evidence, and if they decide to deny your claim, they must provide you with a written explanation. This explanation should clearly state why your claim was denied and what information they used to make that decision. That written explanation isn't just a courtesy, it's a legal requirement under the EFTA. The law is there to make sure banks can't hide behind vague answers or confusing language. And if you want to see the documents or evidence your bank used to make their decision, you have the right to ask for them. The bank must provide you with copies of those documents, so you can review them yourself and decide if you want to challenge their decision. The lawsuit claims that Navy Federal Credit Union didn't follow these rules. Instead, they sent out vague denial letters that left customers confused and frustrated, with no real explanation for why their claims were denied. Imagine getting a letter that simply says your claim is denied, but doesn't tell you why, or show you any evidence. You're left in the dark, unable to understand what happened or how to fight back. That's not just frustrating, it's against the law. The EFTA demands transparency and fairness. It's there so you can understand every decision about your money, and so you have the power to challenge a denial if you think it's wrong. This lawsuit is about making sure those rights are enforced. It's about holding banks accountable and making sure they treat customers with the respect and transparency the law requires. If you ever received a denial letter from your bank that didn't explain why your claim was rejected, you might have been affected by these practices. You're not alone. Many people may have experienced the same thing. Now, let's find out who qualifies for the settlement and how you can take the next step to protect your rights. Wondering if you're eligible for a piece of the $1.7 million settlement? You're not alone. Many people are curious about whether they qualify for a payout, and the process can seem confusing at first. Let's break it down so you know exactly where you stand and what steps to take. There are two main groups who can claim a share: the written explanation settlement class and the document request settlement subclass. Each group has its own specific requirements, so it's important to pay close attention. The first group includes anyone in the U.S. who had a Navy Federal Credit Union account and filed a claim for an unauthorized electronic fund transfer that was denied between October 10, 2022 and August 20, 2025. If you reported a suspicious or fraudulent charge and received a denial letter without a clear written explanation for why your claim was rejected, you're likely part of this class. This means you may have been left in the dark about the bank's reasoning. The second group is a bit more specific. It's a subset of the first group, those who, after being denied, took the extra step of asking Navy Federal for the documents or evidence used in making their decision, but never received them. If you fit into either of these groups, you have the right to file a claim and potentially receive compensation from the settlement fund. Remember, you didn't have to start the lawsuit or even know about it before now. All you need to do is meet the eligibility criteria and submit your claim before the deadline. Take a moment to figure out which group you belong to, because it could impact both your eligibility and the amount you might receive. The details matter, so review your records carefully. Now that you know who can claim a slice of this settlement pie, let's dive into what kind of payout you could actually expect. Here's the big question: how much money could you get? If you're eligible and file a valid claim, you'll get a share of the $1.7 million fund after legal and administrative fees. The more people who file, the smaller each payout. You don't need to provide proof. Navy Federal's records will verify your eligibility. Just fill out the claim form truthfully. The final amount per person depends on how many valid claims are filed. Members of the document request subclass aren't guaranteed a bigger payout, but they're included. By filing, you claim your share and help hold Navy Federal accountable. It's not a fortune, but it's compensation for your trouble. Deadlines matter. Miss them, and you get nothing. The most important: file your claim by December 18, 2025. Miss it, and you're out. Another key date: December 3, 2025. That's the deadline to opt out or object to the settlement. If you opt out, you can sue Navy Federal on your own, but you won't get any settlement money. If you do nothing, you're included in the class but must file a claim to get paid. The final approval hearing is February 4, 2026. Payments go out after that. Mark these dates: December 3rd, opt-out talk object; December 18th, claim deadline; February 4th, final approval. Don't wait until the last minute. If you want your share, act before the deadlines. Payments won't be sent until after the court approves the settlement. Stay on top of these dates to get what you're owed. The settlement isn't just about money, it's about change. Navy Federal has agreed to update its policies to comply with the EFTA. No more vague denial letters. Now, they must provide clear, detailed explanations for denied claims. They'll also improve how they handle document requests, making it easier for members to see the evidence behind decisions. These changes mean more transparency and accountability for all members. Navy Federal hasn't admitted wrongdoing, but these new rules are a win for consumers. The improvements will benefit members long after the settlement is paid out. It's a step toward better banking for everyone. Ready to file your claim? Here's how. Go to StevensonEFTALitigation.com, the official settlement website. Beware of fake sites. Double-check the URL. Find and complete the online claim form with your information. If you didn't get a notice with an ID, you can still verify your eligibility with other details. Affirm you're a class member and, if applicable, part of the document request subclass. No need to upload documents, just be truthful. Choose how you want to receive your payment, check or electronic transfer. Submit the form and save your confirmation. Claims are processed after the final approval hearing in February 2026. File before December 18, 2025, and then wait for your payment. Have questions? Don't call Navy Federal, they can't help with the settlement. Instead, contact the claims administrator, Kroll Settlement Administration. Call them at 833-621-8312 for help with eligibility, the claim form, or settlement status. The official website, StevensonFToLitigation.com, has FAQs, legal documents, and the claim form. Check the website first, your answer may be there. You can also contact the administrator by mail. The address is on the website. For paper claim forms, download from the site, or request by mail. Direct all settlement questions to Kroll. They're your official resource. Why does this settlement matter? It's more than a small check. It's a reminder that consumer protection laws like the EFTA have real power. Banks and credit unions must be transparent and accountable. Class actions let everyday people challenge big institutions and fix systemic problems. The policy changes Navy Federal agreed to will help millions, not just those in the lawsuit. This case sets a precedent for better industry practices. It's a win for transparency and consumer rights. If you're eligible, IO file your claim. It's about more than money. Your action helps hold institutions accountable. Together, we make the financial system fairer for everyone.